What's up, guys? Eric here, Mr. Fired Up Wealth. Today we're going to do some deep dive analysis, some due diligence on Wingstop. Can Wingstop be the next McDonald's? You might laugh when I say that, but I'm telling you, I've got some data that can support the fact that Wingstop could simply be the next McDonald's. You're going to want to see this information. I'm excited to bring it to you. Without further ado, let's get started. Okay, guys, first thing is first, I want to show you the Wingstop website. I think it's a really clean looking website. I like the black and the colors. It's just, I like the marketing. I really, really do. Now, if you look at the menu, this is going to be important later when we do the comparison to McDonald's, but this menu is very simple. You can see basically you got wings, you've got bone-in wings, you've got, tenders, you've got boneless wings, you got sides, you got dips, drinks, and desserts. And you click on desserts, triple chocolate chunk brownie, the one dessert, drinks, real simple, boom, soft drinks, dips and flavors. You got, a couple different types of flavors. If you look at even the flavors of the wings, there's not really that many compared to like even Buffalo Wild Wings. They've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. There's basically 15 or so different flavors. You can come in here and click on wet and get the wet wings. You want dry wings, you can click on dry. You can go to heat scale. You can adjust the scale. You can go in the wing calculator and it says, are you hungry? How hungry are you? We're starving. How many people do you have? I've got 5 people. Boom, 50 wings. You can click order. These guys do a lot of digital sales. You're going to see some of these stats coming up here. Real exciting in terms of the growth potential, especially international. So let's just look real quick at what's the stock doing in terms of performance, what the market cap is, things like that. So this is a $3.8 billion market cap. It's a small cap, which is exciting because that's a lot of times where you can get a lot of growth in stocks when they're small and mid cap. Once they get to $1 trillion market cap, it's a lot harder for you to make a ton of money in the stock. You can still make money, but it's much more mature growth. So this thing is expensive. It's trading at 162 PE ratio. It does pay a 0.44% dividend yield. So this is what I would consider DGIF, dividend growth investing for fired. I'll look at the chart later. I'm going to do a deep dive technical analysis for you on TradingView and look at the technicals for you. But just from a perspective, from a high level, it looks like it's a good opportunity, especially if you can get it 125 or less. But we might kind of already have a floor at that 125. I'll show you what I mean here in just a second. Okay, so I'm going to show you this first because I think it really helps paint the picture, get your attention so that you want to hear the rest. Because after I do this, I'm going to go into a Wingstop investor presentation, and I'm actually going to show you some really awesome, crazy stats in terms of what they're trying to do internationally. So McDonald's to Wingstop, come on, Eric, what's the comparison really here? So in the 1960s, burger popularity was soaring in the U.S. We had the Cold War, and it was kind of viewed as like an American icon, American symbol. And it still really is. You think of the hamburger, the cheeseburger, most people think of that as American food. It might not be the healthiest, but it is what it is. And backyard barbecue was also becoming very popular back in the 60s. So McDonald's was really riding a trend, okay? That was the trend at the time, and they were kind of riding that trend. They started selling 15-cent burgers, which was the industry low. They were trying to be competitive on price and have a good product. And you can see here, this is an old menu. French fries were 15 cents. A hamburger was 15 cents. A McDouble was 28 cents. Filet of fish, 24 cents. Cheeseburger, 20 cents. McDouble cheeseburger, 38 cents. And a milkshake was only 22 cents. Come as you are and eat in your car is what this ad says here. And it kind of ties into the next part here. So simple menu, we just went over it. There was only a handful of products, real simple, industry low prices. And they really had that drive-through model. And right after the 1956 Federal Highway Act, if you remember, maybe you don't from history class, this made automobiles really popular, and more people were traveling to see family members in other states. It made interstate travel really popular and easy to do. And so they were really capitalizing on a trend with burgers, trying to make a simple menu, make industry low prices, and kind of ride the coattails on this 1956 Federal Highway Act. Well, what does that have to do with Wingstop, Eric? Okay, boom. First comparison here. Right now, it's a trend. So we talked about 1960s burgers were becoming a trend. Right now, over the last decade, we've had a really popular trend to be more health conscious. The consumers are caring more and more about what they put in their bodies. They're going more and more away from red meat to higher protein, less fatty chicken consumption. In fact, U.S. beef consumption per capita has dropped 5%, while chicken consumption per capita has risen 16% over the past 10 years, over the past decade. So, okay, we've got that comparison of kind of the trend. What's next? 15-cent burgers from McDonald's Industry low prices for Wingstop as well. If you compare their wings to another popular chain like Buffalo Wild Wings, they're much less expensive. They're trying to scale it. They're trying to make it very efficient and effective so they can get quality products to you at industry leading prices. Another comparison to McDonald's back in the 60s. Simple menu. We kind of showed you in the beginning of the video. It's really simple. They just have a handful of things and they do those things very well. And then boom, last but not least, number 4, we talked about the drive-through model. What's the new kind of trend? Not drive-through, right? Because that was the 60s. So digital orders. And what's interesting is that before the pandemic, more than 40% of Wingstop's orders actually came through digital sales, and now it's estimated to be over 60%. And if you go through their investor presentation, their goal is to be 100% digital sales. Okay, guys, so the growth on here has been really good. Now, obviously in 2020, we had the pandemic and it did slow down a little bit, but I wanted to show you just from 2012 to 2019, and I think that this growth is going to accelerate again. The last earnings call, the management expressed that this is still their mission to basically grow all these stores. I'm going to show you some numbers here. It's going to be really, really interesting. If you want to invest in this stock, this is going to be important. So 2012, you can see a map of the United States. Especially pay attention to Texas, where they're headquartered. They went from 226 to 352. Look at California, 131 to 273. If you look at up here, kind of in these north central states, you know, if you look at Minnesota didn't have any of them back in 2012. Now they have 2. South Dakota went from 0 to 1. And you can see, you know, they've grown almost to every state except for a handful. There's 3 here and maybe up in the Northeast. But they have 69 in Florida. You can see growth accelerated in 2019. This is going to continue. They've really identified 25 key markets to Fortress, and you can see the dots on your screen. This is going to be important. Higher penetration correlates to stronger results. You can see Dallas, Fort Worth, Los Angeles, Miami, St. Louis. They're really trying to tap into those markets. They also are doing ghost kitchens in the UK. They've got Mexico. They've got the airports. They've got new cooking platform. You can see those stadiums. They're focused on like some stadiums, airports, casinos, college universities, ghost kitchens, food courts. There's 500 plus restaurants. It says Wingstop fully penetrated potential. So they're trying to grow more into those, which I think are really key areas to be in. Especially when you think of just name recognition, right? Getting people to get used to the brand. They see it at their favorite sports complex. They see it when they're at the airport. They see it, you know, in the university. And you think of universities too. I mean, younger people generally like wings and they're going to eat wings. You know, you go out for on a Friday night. What do you do afterwards? You want to grab some greasy food, some wings, some fries. I think this is really good. Food courts as well. But I love the strategy and how they're trying to brand themselves and how they're trying to grow. So this is an example of what they're trying to do. Phase 1, phase 2, phase 3, and phase 4. They've already entered Hong Kong and they're prepping for China entry. Wait till you see how many stores they're trying to grow in China. I think this could be massive on an international scale. So here you see, it says build out and support existing markets. They've got all the flags there. Mexico, they've got Singapore, Malaysia, Indonesia, all those new launches. They're trying to launch in the Netherlands, Saudi Arabia, Germany, Canada, and begin groundwork for major key markets. They're trying to focus next on China, South Korea, Japan, and Australia. So check this out. This is the international expansion roadmap. Black on the black here is China. They want 1,200 restaurants. Over here you see the growth. This is from 2019 to 2029, and they're trying to grow this thing in a massive, massive way. How massive? Well, 6,000 global restaurant potential. They're talking about domestically in the United States, 3,000 plus. They have 1,231 restaurants right now in 44 states. They want to over double that, almost triple that, go 3,000 plus. International, they have 154 restaurants right now only in 9 countries, and they're trying to go to 3,000 plus and you know, make that number of countries much higher. The room for expansion here, if they continue this model, this trajectory, considering it's a small cap, it is actually mind-blowing. I get really excited. For a food stock, I can't think of many food stocks that are much more exciting than Wingstop. Next, I'm going to show you some technicals. I'm going to go deep dive into the technical analysis, show you what on the chart, what I think the stock might do next. So stay tuned for that. Okay, so if you're new to the channel, I'm a long-term investor, but I use technicals for better entry and exit points. I also do some day trading and use technicals for that. But from in terms of an investor, you're really looking at, I want to buy this stock and hold it long. Is it a good price to buy it now? Is it a good price to sell it now? I generally look at trend lines RSIs, that's a relative strength index that goes from 0 to 100, and then moving averages. So without going into too much detail on that, if that's something that interests you, definitely subscribe to the channel, because that's the type of stuff that we do. And if you're really, really interested in this, we've got a Patreon, we've got a Facebook. Check out all the different platforms. Wingstop trading right now at 128. It did just have a massive pullback, had earnings, and then the earnings weren't as spectacular as many analysts hoped. I didn't think the earnings were terrible, but they weren't spectacular. And then right behind that, we had kind of the sell-off, the market correction, where anything with high PE and tech, it basically got sold off hard. This stock, you know, it's not a tech stock necessarily, but it has a high PE ratio because they are leveraging technology into the business. But frankly, it has a high PE ratio. It's 150 plus on the price to earnings. And so any kind of stock that has a high PE, high multiple, usually is going to get hit pretty hard when those rates spike up. So we had the 10-year treasury spike up to 1.6 plus. You saw a lot of stocks sell off. It was kind of the perfect storm for Wingstop, and I think they got punished even more than they should have been punished. You can see the moving averages in the 200 is 138. It broke way past that. I'm going to show you here on this next slide. You can see, and I'm actually going to move my camera here. Okay, now I'm down over here. So I moved my camera so you can see the chart a little better. So this is basically, let's do a 1 year chart. So this is going back. You can see anything you bought in March of 2020 would have been a great buy. It was $44. But let's just ignore that part because we're probably not going to get back to that price. So you saw that we had this run up in May, and we had kind of a sell off in June down to $113, spiked all the way to $170. You know, and kind of teeter-tottered. You had this first range right here. You see where the orange line is, 125, 126 range. That's where I thought it might first go. It was $172.87 before earnings. I started buying it, you know, in this range, thinking it would probably have a decent footing here on this orange line. Well, of course, perfect storm. Everything was selling off. Everything got sold off hard. It broke that, and it went down to this red line, which makes sense because it's not kind of the next leg lower. And this is where technicals can really help you as an investor, because you could look at this and say, okay, well, you know, I might buy it here, but it could certainly go down here. I buy more here, and it could always even go lower than this. But you knew, statistically speaking, there was a good chance that was probably going to find some buyers in this $113, $114, $112 range. And it literally came down and touched $113 right in that range. You can see this red line and bounced off. Now, I believe that we have a new floor of about $125. It doesn't mean it can't break it. You know what the downside probably is. Unless there's a really huge fundamental catalyst, you're probably not going to see it break 112 right away. If the whole market rolls over, guys, of course, it could break down. You know, this thing could go down to 80 bucks. I mean, it's that expensive. But I personally, I'm a buyer, especially between this orange and red line. And even where it's at right now at 128, I think if the market keeps its footing, I think this stock goes higher. I think over a 12-month period, this stock could easily be back to all-time highs. I would look for $175 to $185. You know, I'm not a financial advisor. I can't tell you what to buy and sell, but I'm buying this thing. I started buying it at 130. I was buying all the way down. I've got a nice position, about 1% of my portfolio. I'm willing to add more if it comes down. But honestly, guys, in this price range, especially 125 and less, I personally think it's a great long-term opportunity as a buy. If this video helped you, please hit the subscribe button, hit the like button. Please drop me a comment. Stop by the other platforms. Thanks for watching. Have a great rest of your day. Take care.